Let us start with today's class. So in today's class we will be dealing with all those topics that are mentioned in this Excel. Okay, so first part is, let us understand the meaning of different terms: assets, liabilities, expenses and incomes. Okay, so if I define the assets, what does asset mean? Asset means the properties of organization with which the organization will get some benefit in future. Okay, for example, it can be my computers, it can be my buildings, it can be my patents, it can be my trademarks, it can be my goodwill, it can be some land, right? It could be my some investments. I might have done some investment. It can be my FDs, it can be my cash balance, or it could also be my bank balance. I could also have some stocks, right, that I have purchased to sell. So until those are sold, those will stay in my inventory, and those are also my assets, because after when I sell it, I will get the benefit from it, right? And I am the owner of this stock. So that is the reason these all the things can be termed as assets. So under assets we have current assets and non-current assets. So current assets means the assets that will provide benefit only for 1 year from now. Okay, long term asset means the assets that will provide long term benefits. Long term benefits means more than 1 year from now, right? Now let us plot some of the examples. Like in current assets, if I talk of cash balance, some short term investment, right? You might have given some deposits, your inventory, because inventory is not kept for long term, it is kept for selling, right? So it your inventory means nothing but the stocks. Okay, so these are some of the examples of short term or current assets. Let us plot some examples for long term or non current assets. Those could be my fixed assets. Fixed assets means land, building, plant, machinery, computers, all those things. And maybe long term investments, your goodwill, right? Patents, copyright, trademarks, etc. Again, we can also classify our assets into tangible assets and intangible assets. Sorry. Tangible asset means any assets that we can touch, right? And intangible assets means any assets that cannot be touched. If we talk of the examples in the tangible assets, those could be like fixed assets, like cash balance, bank balance, investments, etc. If I talk for the intangible assets, those could be my goodwill. I cannot touch my goodwill, right? Trademarks, patents, copyrights, etc. So now are you clear what is assets, what are current assets, non-current assets, what is tangible assets, what are intangible assets? Now let us look some of the headings under assets in the balance sheet. So we have fixed assets, then we have current assets, then we have non current assets, then we have other assets. Under fixed assets we can have, so these are let's not talk about this thing now. Okay, we can have these different headings under the balance sheet in under assets. So under non-current assets, what could be classified, we have plotted the examples here, right? Similarly, under current assets, what can come? Under fixed assets, what can come? We understand that very well. Now let us talk about the liabilities in the balance sheets. So liabilities are just opposite of assets. Means when we are liable to pay something to someone, that we term as liabilities. For example, we can talk about the capital, right? Capital is a liability, it is a owner's stake. The reason being, if somebody has invested in my business, right, I am liable to pay him the profits out of my business. That is the reason I am liable to pay, so it is a liability. Let's say our creditors, I have to pay to my creditors, right? Borrowings, I have taken some borrowings, loans. So in that case also I have to repay to those person or to the banks to which, from whom I have taken the loans, right, or borrowings. Similarly, there can be some provisions and other liabilities, right? Now again, as we have classified our assets into current assets and non-current assets, similarly we have current liabilities and non-current liabilities. So if current liabilities means that we are liable within 1 year from now, right? Non-current liabilities means more than, means we will be liable in a time more than 1 year. Do you get this point? Okay. Let us plot some of the examples of current liabilities. Like our creditors, right? If we have purchased something from someone, they will never give us the credit period of more than 1 year, right? They may give 1 month, 2 month credit period. So those creditors can be under the current liabilities. There can be some short term loans, right? And some short-term provisions. Similarly, if we talk of the non-current assets, non-current liabilities, sorry, those could be say long-term borrowings and long-term provisions, capital, and some other liabilities. that we will be liable to pay in time greater than 1 year. Okay, now let us talk about the headings under liabilities in the balance sheet. So what headings could be there? We can have capital, right? And we can have reserves. Reserves means nothing but the net profit or loss for the year. The net profit or loss that we make during the year, we put under the reserves. Like in yesterday's class, if we see, we have put the net profit transfer from the income statement 21,500, right? So this will go under my reserves heading. So reserves we have, and we have current liabilities and non-current liabilities. Now what can be classified under current liabilities, what are to be classified under non-current liabilities, reserves, capital, this is all clear, right, as per the explanation given above. So this is what we have covered, the meaning of assets, liabilities, its the different headings that appear in the balance sheet, the meaning of those terms, right? Now let us go into the income statement. Income statement. So in income statement we have expenses and we have income. Expenses means means the cost that are incurred and for which benefit is received. Okay, and income means the benefit that we have received. So the benefit that we have received is called income. If we talk expenses examples, then we can take like rent expenses, we can take electricity expenses, we can talk about some salaries, right, wages, and we can some uniform cost and other expenses. Similarly, if I talk of income, we can consider examples as like interest income, sales. We might receive some commissions, correct? So these are the different examples of income that we can take, and above are the different examples of expenses that we can talk. So in income statement, now what are the headings that can come under expenses? So those headings I have already listed out here. Let us see from those headings. Okay, first we will check from the expenses point of view. So they are broadly, if we classify our expenses into broad terms, then we can have admin cost, we can have finance cost, we can have production cost, and we can have some secondary costs. So in the admin costs, we can have the cost like rental, salary, electricity, some of the employee claims. In the finance cost, we can have come some interest expenses, legal expenses, and in the production cost, we can have like material consumption, semi-finished goods consumption, some service cost, some wages, and some sales and distribution cost, R&D cost. Similarly, in the secondary cost, we have some other sort of costs that we will discuss later. So these are the different bifurcations of the expense headings in the income statement. Coming to income, the different headings in a broad sense could be direct income, indirect income, and other income. So on the direct income, we can have sales and sales return. In the indirect income, we can have interest, commission, dividends. Dividend is nothing but the profit share that we get if we buy the shares of any company. and some of the discount received, and other could be some other miscellaneous incomes that we received during the course of our business. So these are the different headings, different subheadings under the income, under the expenses. So with this we have covered the income statement and the balance sheet. So let us come to our agenda for today's meeting. We have covered this particular thing and this particular thing. Okay. Now let us move into point number 2. Here we will try to understand what is an offsetting account. Let's say I have a journal entry, rent account debit and bank account credit. Bank account credit. Okay, suppose this is my entry, journal entry. Now, if I talk from the rent account perspective, rent GL perspective, okay, then my bank account is my offsetting. And if I talk from bank accounts perspective, then my rent account becomes the offsetting. So the debit against a credit is offsetting and the credit against a debit is offsetting. Okay, if I talk from a rent accounts perspective, my offsetting account is my bank account. Okay, so I hope the meaning of offsetting account is clear now, right? Now let us talk about this point number 3. Point number 3 they says in a journal entry, the all the total of debit must be equal to total of credit. Let's say rent, debit and bank credit. This is my entry. This is my entry. Bank account is credit and rent account will be debit. Yeah. So if I have in the debit side 1,000 rupees, then it is must that I should have credit on the credit side also 1,000 rupees. If I write just 500 rupees, this entry cannot be posted, right? Because total debit must be equal to total credit. That is the basic rules of accounting. Okay, so this is point number 3. Now we will talk of this block. Point number 1 is we have parked entries. So what is the meaning of parked entries? Parked entries are those sort of journal entries that do not impact on the financial statements. That means these sort of entries and the accounts that are there in these sort of entries are not taken to balance sheet and income statement. Okay, is this clear? So parked entries basically mean those sort of entries that do not impact our financial statements and they are not taken to the balance sheet or income statement. Okay, so why the entries are parked if they do not form the part of the financial statements? That is the main question, right? So people park the entries to get it approved by their supervisors. Okay, so once their supervisor will approve the entries, then this entry will be posted into the ERP, and once it is posted, it will be the part of the financial statement. Okay, so until the entry is approved and posted, its status will be remained as parked entries if it has not been directly posted by me. Okay, coming to held entries. Held entries also do not impact financial statement. They are not taken to balance sheet and P&L. So what is the difference between held entries and park entries? Parked entries are always complete. Okay, held entries are not complete. So why do people put the entries on hold? The reason could be they might know the debit part, right? They may be unaware of the credit part, what has to be credited, okay, which account has to be credited, or they may be knowing the credit part, they may not be knowing the debit part, right? So what they will do, they will hold this. If they hold this and later they can check what account is to be debited, they can come and again open this entry and complete the entry. So if this is the purpose, then those sort of entries are called held entries. Next entry is noted entries. As part of the basic accounting principle, I have told that every debit must be equal to the credit in a journal entry. But this rule does not apply to noted entries. Noted entries are those sort of entries which have either debit or credit, but not both. Okay. So the main question is why the noted entries cannot have both debit and credit. Okay. So those if I take one example of the noted entries. Okay. So let us say I have to ask my customer to make the payment to me. Okay. So how do I ask my customer? First I will create one noted item. This will be called as request to pay. Okay. I have just made a request to pay. I have not received any amount, right? And nobody liable to pay me, right? I have not received any amount and nobody is liable to pay me. So this is not a this is not monetary transaction. This is just a simple ask, just a request. It is not a monetary transaction. And you might be knowing that in accounting only the monetary transactions are where the cash or cash receivables or cash payables are involved. Those entries are only booked, right? So since request to pay is not a monetary transaction, okay, because no cash transactions are involved in this, therefore we call request to pay as a noted item. So noted the rule that apply for parked and held entries also apply for noted entries. That means those do not form part of financial statements and they are not taken to the balance sheet and profit and loss. I hope the noted items is clear or noted entries are clear. Now coming to special entries. Special entries are those sort of entries that are not normal in nature. Okay, when I say those are not normal in nature, what I mean is let us first understand what are normal transactions. Those are expenses, payments, income, receipts. Okay, receipts, purchase, sales, and so on. These are my normal entries. But if I talk about the advances, deposits, okay, so these sort of entries will be covered under the special entries, and they are denoted by some characters in SAP. Okay, like for example, advances will be denoted by A, deposits will be denoted by D, like this. So I hope the meaning of asset, liabilities, expenses, income is clear. The meaning of offsetting account is clear. The concept of debit equals to credit is clear, and in which situation this basic principle does not apply. We understood the meaning of all those sort of entries, and we also understood different headings that appear in our financial statement, that is balance sheet and P&L. Do you have any question in today's session? Okay, so in case you do not have any question and everything is clear, so let us close this session for today and we will meet up again tomorrow.